Hello everyone. Today we're diving into the latest trends in the rare earth industry and what the future might hold, especially the current pattern of light rare earths strengthening, while heavy and medium rare earths are fluctuating. Rare earths are often called industrial vitamins, not just basic materials for technology industries, but increasingly strategic assets in global competition. With rising geopolitical tensions and China tightening export controls, supply has become extremely constrained, while demand Rome electric vehicles, wind power, and humanoid robots is skyrocketing, pushing the industry into an unprecedented critical period. Right now we see rare earths like praseodymium and neodymium performing strongly in permanent magnets, while heavy and medium rare earths such as dysprosium and terbium are fluctuating at high levels, reflecting subtle shifts in the global market. From a technology perspective, China leads the world in rare earth refining and separation, securing domestic supply and giving it a central position in the global value chain. Electric vehicles and wind power provide a stable floor for demand, while emerging industries like humanoid robots continue to push the ceiling higher, and new areas such as low-altitude economy and green home appliances add hidden incremental demand, meaning the market space could grow far beyond expectations in the next few years. Investors should be aware that while opportunities are huge, risks are significant. Extreme supply constraints could lead to price volatility and uncertainties in overseas mining operations may impact market expectations. Against this backdrop, 2026 may become a pivotal year for resource consolidation and the rare earth industry, fundamentally reshaping pricing power, which will have deep implications for upstream and downstream companies as well as investors. Key factors to watch include production capacity for permanent magnets, the expansion speed of downstream electric vehicle and wind power equipment, and the stability of heavy and medium rare earth supplies, directly affect market trends. For investors, understanding the fundamentals of rare earths is far more important than blindly chasing price spikes. It's crucial to know which elements are truly scarce, which segments control pricing power, and which companies hold technical or production advantages, while also keeping an eye on policy shifts, international trade tensions, and sudden overseas mine disruptions, as these can have major short-term price impacts. Overall, the rare earth industry is undergoing a transformation of extreme supply-side constraints and explosive demand growth. This is not just an industrial opportunity, but a strategic lever in global technology competition. Understanding industry logic, identifying core risks, investment targets, and anticipating trends over the next decade are essential. The current pattern of light rare earths rising and heavy and medium rare earths fluctuating highlights structural changes in the global market and the trend of resource consolidation. In the future, whoever leads in tech, Technology, production capacity, and supply chain will likely gain pricing power, influencing not only corporate profits but also national strategic resources. RCE positioning. The market feels like a silent battle, with opportunities and risks coexisting. Ordinary investors should seize the industry's upside, while staying cautious, understanding the underlying market logic, and avoiding blind speculation. Rare earths are not just industrial vitamins, but a core strategic asset in global technology competition. Grasping their supply-demand dynamics, investment logic, and potential risks is key to navigating the industry and capturing opportunities in the next 10 years of technological development and industrial shifts.